Hey, future property moguls! If you've been waiting for the right moment to jump into real estate, 2025 could be your year. Forget the noise about the market being too hot or unpredictable. There are always deals if you know where to look. It's not about timing the market, but about being in the right market. I've dug into the data and talked to insiders to bring you the top 5 real estate markets for 2025. Places with explosive job growth and long-term wealth potential. We'll break down why each city made the list, what properties to target, and the neighborhoods with the most upside. Stick around to the end for the hash, one mistake most investors make, one that could cost you big. Smash that like button, hit subscribe, and let's dive in. Number 5 is Nashville, Tennessee, a city that's evolved from country music capital to a booming tech and healthcare hub. Major players like Amazon and Oracle are bringing high-paying jobs, fueling a population surge and a red-hot housing market. The median home price is still affordable compared to other tech cities, and rental yields are strong thanks to a steady influx of young professionals. Nashville's year-round tourism also makes it a goldmine for Airbnb and short-term rentals if you buy in the right zones. The best neighborhoods? Look at East Nashville and the nation's vibrant, artsy, and attracting the exact demographic driving the city's growth. But competition is fierce. Bidding wars are common, so you need to be ready to move fast. Here's the edge: instead of fighting for properties in the trendiest spots, look just outside the downtown core, within a 15-minute drive. These areas offer lower entry prices and are poised for appreciation as the city expands. Think like a tenant, more space, quieter streets, but still close to the action. Single-family homes and small multifamily properties here can cash flow from day one, with appreciation as a bonus. Nashville rewards investors who do their homework and act quickly. Recap: booming economy, strong rental demand, and up-and-coming neighborhoods just outside downtown. If you're ready to hustle, Nashville is a top pick for 2025. Number 4 is Miami, Florida, a city reinventing itself as a global financial and tech hub. Zero state income tax is drawing high earners and companies from across the country, fueling a migration of wealth and talent. Miami's international business ties and embrace of crypto and tech are driving a fundamental economic shift. Major infrastructure projects and a changing population mean stronger, more resilient rental demand. While luxury condos in Brickell and South Beach get the headlines, the real opportunities are in neighborhoods supporting this growth. Look for single-family homes, duplexes, and small apartments in areas like Wynwood and Little Havana places, with value-add potential and ongoing revitalization. Miami is competitive, with global investors driving up prices, so patience and sharp numbers are key. Pro tip: target up-and-coming neighborhoods adjacent to hotspots like Allapattah, just north of Wynwood. These areas offer lower prices but benefit from the same growth drivers as their pricier neighbors. Renovate, modernize, and attract tenants priced out of the prime areas. Work with a local agent who knows the micro-neighborhoods, and look for signs of new development and amenities. Miami is all about momentum. Get ahead of the wave, and the returns can be phenomenal. Number 3 is Austin, Texas, the tech juggernaut with zero state income tax and relentless job growth. Apple, Tesla, Google, Meta, and Oracle are all here, creating tens of thousands of high-paying jobs and driving massive population growth. Austin's housing demand is sky high, but prices have risen, so finding a deal takes strategy. The best opportunities are in the suburbs: Round Rock, Pflugerville, Cedar Park to the north, and Buda and Kyle to the south. These areas offer good schools, more space, and strong appreciation potential. To make deals work, look for value-add properties or consider house hacking. Live in one unit, rent out the others. Insider tip: watch where major tech companies are expanding, like Oracle's campus near Lady Bird Lake. Buy in neighborhoods with easy commutes to these job centers, especially in Southeast Austin, which is still relatively affordable. Anticipate where demand is headed, not where it's already peaked. Austin's growth story is far from over, and strategic investors can still find life-changing opportunities. Number 2 is Charlotte, North Carolina, a quiet powerhouse with a diverse, resilient economy. It's the nation's second-largest banking center, anchored by Bank of America and Wells Fargo, plus strong energy, healthcare, and tech sectors. Charlotte's steady population growth and lower cost of living keep housing demand high. The big draw for investors: affordability. Median home prices are much lower than in other top markets, making cash flow easier to achieve. Focus on neighborhoods benefiting from growth and infrastructure. Look for affordability, safety, and access to job centers. Hotspots include Noda, Plaza Midwood, and revitalizing areas on the west side. The real secret: follow the Lynx Blue Line light rail. Properties within walking distance of a station are highly desirable for renters, offering easy commutes and future-proofing your investment. Charlotte lets you build a cash-flowing portfolio with strong fundamentals and long-term upside. And at number 1, Dallas-Fort Worth, Texas, the economic behemoth and ultimate investor's playground. DFW leads the nation in population growth, with no state income tax and a booming, diverse economy. Major corporations like Toyota, McKesson, and Charles Schwab have relocated here, bringing waves of high-paying jobs. The Metroplex's size means dozens of submarkets, from affordable suburbs to established neighborhoods, each with unique opportunities. Northern suburbs like Frisco, Plano, and McKinney are magnets for families and professionals, offering great schools and amenities. Even with all this growth, DFW's vastness keeps prices from skyrocketing, so you can still find cash-flowing properties with appreciation potential. The challenge: DFW is huge, so specialize in a specific submarket or neighborhood. Pro strategy: follow the corporate relocations. When a company moves in, target the suburbs and school districts their employees will want. Example: Charles Schwab's move to Westlake boosted demand in Southlake, Keller, and Trophy Club. Become an expert in one or two of these corporate-driven submarkets, and you'll find the best deals in the country's top market for 2025. There you have it, the top 5 real estate markets for 2025: Nashville, Miami, Austin, Charlotte, and Dallas-Fort Worth. But here's the crucial mistake most investors make: they chase last year's hot market instead of spotting tomorrow's opportunities. The best deals go to those who anticipate growth, not those who react to headlines. Focus on leading indicators: job growth, migration, and corporate moves, to see where the market is headed. Don't try to invest everywhere. Pick one market, become an expert, and connect with local agents and investors. Analyze deals daily, get your financing ready, and take action. If this video helped, smash that like button and subscribe for more insights. Drop a comment with the market you're most excited about. I read every one. The best time to invest was 20 years ago. The second best time is today. Your real estate journey starts now. See you in the next video.